Two more IDs that have to do with the extreme greed that took off in America in the 80s and 90s and early 2000s. It was a remarkable period of economic growth, and as I have mentioned before, most of the wealth that is generated went to the top 1% who were in a position to make money on the new technologies and the growth of multinational corporations. Reflective of this period of greed, let me say this. Some people who were observing the new greed of the era in which they saw CEOs beginning to be paid unbelievably high salaries observed that this seemed to be another Gilded Age for the United States, harkening back to the late 19th century when robber barons and people like Jay Gould were so interested in piling up wealth for themselves that they really didn't care what happened to others. A very good example of this is Ken Lay. Ken Lay was the president of a company called Enron. Enron was a new energy company that had emerged in the early 80s when we deregulated the electrical system in the U.S. There used to be tight government control over the energy sector, with limits on how much companies could charge. And what Enron did was it entered into the trading of energy on the national level and became a very successful company, or so it appeared. As the years went on, some shenanigans were at work within the top leadership of Enron. Ken Lay and his top managers were hiding the fact that the value of the company was not what they were reporting. And the top Enron executives, including Ken Lay, siphoned off a lot of money for themselves and hid it in the Cayman Islands, where there are financial institutions that don't ask much about where the money comes from, but is a good place to park money such as this, which is ill-gotten, and you want to hide it from government institutions. At any rate, Ken Lay and the managers were able to make off with all of this money. Now let me show you, here is Enron's stock price between 1984 and 2001. A lot of buzz was created about the value of the company. What it turns out, however, is that it's called cooking the books. When you are lying about your accounting results. And as you can see here, as we get into 2001, the truth about the value of the Enron stock is revealed. Ken Lay and the top managers saw it coming and hid all this money, as I said, in the Cayman Islands. And when the stock collapsed and the company became absolutely worthless, they had their money hidden away. The result of this Enron debacle was that investors lost billions, workers who had their pension plans tied up with the Enron stock, and there for a while these employees thought that they were going to be quite wealthy in their lifetime working for and owning stock in this company. This picture here is when workers are leaving the last day, when Enron just collapses and closes. What Ken Lay and his partners did, they did out of greed. And there seems to have been, at this time, perhaps still, an enormous amount of greed taking place at the highest echelons of our financial and capitalist system. Ken Lay and the other men associated with them were prosecuted. However, they had so much money hidden away that they were able to hire an excellent team of lawyers to stretch out the trial. Ken Lay, however, did die in prison while waiting trial. Another spectacular example of the greed of the period is Bernie Madoff. He was a person who sold stocks and bonds in New York, and he ended up starting a company in which he took on investors, and he marketed his products aggressively. What he said is, invest in my company, and my company will invest your money in a variety of different securities, and you'll make a lot more money investing through me than you would through other brokerages. Well, what he did was something called a Ponzi scheme, and that is, as money came in, he would start paying out dividends to his early investors But much of what he is paying them is from his increased sales to from new clients. So although he might have been making some decent returns on the investments, what he is mostly doing is inflating the returns on the investments by giving money to his investors from his new investors, so that he appears to be much more profitable than what he really is. And then they can then turn around and market his successes and grow his clientele. Here's some talk about his investment company. This appears to be May 2001. Madoff tops charts. Skeptics ask how, is this article. Mention Bernard Madoff's investment securities to anyone working on Wall Street at any time over the last 40 years, and you're likely to get a look of immediate recognition. After all, Madoff Securities, with its 600 major brokerage clients, is ranked as one of the top 3 market makers in NASDAQ stocks. Cites itself as probably the largest source of order flow for New York Stock Exchange listed securities, and remains a huge player in the trading of preferred, convertible, and other specialized security instruments. But it's safe bet that relatively few Wall Street professionals are aware that Madoff Securities could be categorized as perhaps the best risk-adjusted hedge fund portfolio manager for the last dozen years. More important perhaps, most of those who are aware of Madoff's status in the hedge fund world are baffled by the way the firm has obtained such consistent, non-volatile returns month after month, year after year. What Madoff is able to do is to continue to generate new clients and keep this stream of money moving, and is excellent at hiding how his program works. But it eventually catches up with him, and his Ponzi scheme comes unraveled, and his investors lose billions. At one point in time, he had about $65 billion under management. So here, if you look at this, biggest Ponzi scheme in U.S. history, 65 billion fake client profits. Estimated losses for his investors, 18 billion. All sorts of people who were his clients, who had risked big with him, end up losing everything they have. And Bernie Madoff ends up being prosecuted and is still in jail. I noticed that I believe HBO is about to launch a new program on Bernie Madoff. Perhaps you'll find it interesting. So these two people, Ken Lay and Bernie Madoff, is really just, they're indicators of what's going on in America in the 90s and 2000s. And it really sets up the degree of risk and greed that drove the big banks, insurance companies, and associated industries into this period of extreme fraudulent activity during the period. While trillions of dollars were made in the economy during this period, much of which was associated with the financial industries, the shenanigans that they were up to were discovered in 2008 as the real estate market, after years of having been battered, ended up revealing the false nature of the value of a host of securities and the institutions which held them. That collapse in 2008 sets off the Great Recession of 2008, 2009, 10, 11, 12, all of which President Obama was required to deal with in his presidency, as were countries in Europe